Hey guys, hope you're having a great day. Your buddy Tim back with another video, and in today's video we are talking about closing costs. What are they? How much are they? Who can pay them, and how they can benefit you as a buyer and you as a seller. Now, closing costs are those costs that typically are charged by a lender in order to write you the loan. Now, they've got certain costs and they get certain fees, and so all of that rolls into closing costs. That can also include things like title fees, attorney fees, appraisal fees. So all of those things are called closing costs because they're typically paid at closing. Now, the question becomes, who is responsible for paying those closing costs? Well, typically it is the buyer. The person borrowing the money is the one that's going to pay their own closing costs. Now, on the seller side, there are some closing costs as well, typically the title fees, property tax, that sort of thing. But the bulk of the fees do come from the buy side. So again, those are any number of fees. You know, you're always going to have an appraisal. You're going to have attorney fees. You're going to have title searches. You're going to have just their general loan fees. And those can all bundle up. And typically, closing costs can run you anywhere from 3 to 6% of the amount of the home. And so if you're looking at buying a $200,000 home, well, that's going to be anywhere from $6,000 to $12,000 in closing costs that you can incur. And that is money that you're going to have to bring to the table at closing to get the deal done. That does not include your down payment money. All right, this is one of the things we see quite a bit with clients, especially on the buyer's side. They've saved up their 3% or their 10%, what have you. But then when they get their final numbers, the closing estimates, there's another $6,000 in fees on there. Well, who's going to pay that? Well, if the borrower does not have the money to bring that money to the table, or if they can't roll those costs into the loan, they're going to look to the seller. Now, the good news is here in North Alabama, the seller's market that we've been under over the last year, we've been in a hard seller's market, meaning low inventory, inflated prices. Sellers were clearly in the driver's seat, and they did not have to contribute to the buyer's closing costs to sell a home. And so it was actually very rare that we saw a seller offering to pay any closing costs. Well, that's changing a little bit. Here in North Alabama, we are still in a seller's market, mainly because the inventory is still tight. You know, we've only got a couple of months worth of available inventory, which technically means we're still in a seller's market, but the market is slowing down. The brakes are being pumped primarily because of interest rates, because of the economy, things that are going on, not to mention the time of the year, things typically slow down. But all of a sudden, sellers are a little more agreeable to perhaps paying closing costs and offering those concessions or that assistance to the buyer in the form of cash contributions to close. Now, again, you know, you can't use closing costs for things like a down payment. That is not allowed, but they can go to pretty much anything else. They can go to pay down all those lender fees. They can pay title fees. They can even be used to buy down points to get a lower interest rate. And that's one thing that I encourage you to look at. If you are a buyer and you're looking at buying a home and you are going to ask for closing cost contributions from the seller, what's the best use of that money? Is it to pay all those fees up front so you don't have to, or is it better to buy down the interest rate to get your monthly payment down? We've done videos on that. We're not going to go into that on this video. You can look at some of the others. But it is becoming much more normal here in North Alabama for buyers to request that the seller kick in a little bit of money and help them with closing costs. We're seeing this a lot with new construction. I did a video a couple of weeks on this. The builders here who have lots of new construction sitting on the ground are now offering all kinds of concessions to pay closing costs, to buy down points, that sort of thing. So what I wanted to do in this video, though, is actually look at closing costs and how much they can be, because it really ranges or differs depending on the type of loan, that sort of thing, how much they can contribute and how best to use those fun. So I'm going to bring up a little graphic here, and you can see we're going by loan type, property type, contribution type, down payment, and the maximum seller contribution. This is the maximum amount that you as a buyer can request that the seller pay. Now keep in mind, the seller does not have to agree to pay these closing costs. You can ask for them. They don't have to pay them. Closing costs have really become part of a negotiation now. Okay, you can ask for a lot. They're going to offer you less, and you can negotiate it down, but at least you're probably going to get something. So, all right, so let's look at a conventional loan. I'm not sure where the graphic is going to be, but conventional loan on a primary or secondary home. The primary home is the home that you're going to live in. Secondary home typically is going to be a vacation home. This is not an investment property. That's a different category. So if we look at primary and secondary home, the contribution types, closing costs, prepaid items, and discount points. Closing costs can be attributed or funneled toward those costs. It's driven by the amount of your down payment. So if you're going to put down less than 10%, as most people do, the max the seller can contribute is 3%. So let's say it is a $300,000 home. You're putting down less than $30,000. The max the seller can contribute is 3% or $9,000. All right. If you're putting down 10 to 25%, good for you. Anything over 20%, you're going to avoid those nasty PMI charges, private mortgage insurance. The seller can contribute up to 6%. So on a $300,000 home, that's $18,000, if my math is correct, that can go toward your costs. All right, so if you're putting down more than 25%, you can ask the seller to contribute up to 9%. That's a large number. That is a huge number, and it will go a long way to taking care of closing costs, buying down points. That's a lot of money to contribute. All right, so let's look if you next if you're an investor. And you're going to get a conventional loan to buy an investment property. This could be a rental home, could be, you're going to do an Airbnb, whatever. The contribution type, closing costs, prepaid items, and discount points, same thing as if you're buying it for primary. But if you're putting down 15% or more, and if you're an investor now, most lenders that we deal with are requiring that you put down at least 20%, but the maximum contribution from the seller can be 2%. So if you are buying a $200,000 investment property and you're putting down 15% or more, you can ask the seller to contribute up to 2%. So now let's look at an FHA loan. If this is going to be your primary residence, you're doing an FHA loan, they can contribute up to 6% toward your closing costs if you're putting down 3.5% or more. All right, so that's something to keep in mind there. You have to put down at least 3.5% on an FHA loan in order to ask for the maximum contribution from the seller. All right, so let's look at a VA loan. VA loans are kind of their own animal. If you're buying your primary property, the contribution type, you can put that money toward closing costs, discount points. You can include debt payoff and prepaid items from these closing costs. That's kind of unusual there, but talk to your lender about what you may be able to do if it's a VA loan. You don't have to put down anything on a VA loan. There's no down payment requirement, but you can see that they can put unlimited up to 2 discount points. That's going to go towards your closing costs and discount points. And then if you are also rolling in debt prepaid items, they can put another 4%. So again, these things kind of change from time to time. Make sure you check with your lender before you actually go through it. All right, so let's talk about USDA loans. These are usually rural development loans. You're doing these for your primary home. And again, closing costs, your prepaid items. There's no requirement there, meaning there's no down payment required, and the seller can contribute up to 6%. So you can see, regardless of whether you're buying a primary home, secondary, investment property, really any loan type, you are able to ask the seller to contribute anywhere from 2% all the way up to 6%, okay? I know here in the state of Alabama, our average closing costs are only about $2,400 based on the average sale price of the home, but I've seen them go much, much higher. So it's always nice if the seller will contribute something toward your closing costs. Okay, so there you go, guys. I hope that was informative. Remember, closing costs are those pesky fees that you, the buyer, and the seller are going to incur at closing. They're going to run anywhere from 3 to 6%. And again, if you're getting a $200,000 loan, that's anywhere from, gosh, $6,000 to $12,000. So they can really add up. If you're doing a much larger loan, they're really going to add up. So this will give you a good idea of what you can ask for. Your realtor should be able to tell you more about this. And hey, if you are looking to move to North Alabama, don't forget, we have Revolved Realty here, 93, 94 agents now ready to go to work for you. I work with people every day that find us here on this YouTube channel, and give us a call at the number below, and we'd be more than happy to help you. So also, if you like what we do here on the channel, you like our content, do me a favor, click that subscribe button, give us a thumbs up, click the little bell, and that way you never miss another video. And God forbid you miss these videos, because they are an entertainment value. You get what you pay for. That's why they're free. So, all right, guys, I hope that was helpful. If you got any questions or comments, drop them in below. And otherwise, I'll see you on the next video.